All right, here we are with Yahoo Finance talking about Gotham Cash. Here are 3 places to park your money. So let's go through this and see, are these good suggestions? What else might there be? And what are better questions you might want to ask to find the right path for you? So if you're among the millions of Americans who bought I-bonds last year, you got up to 9.8%, I think, you may be looking for a better place to park your cash. So this is the first part of the article. It says, I-bonds, the breakout investment star of 2022, and at the time the article was written, was offering a 6.9% return. But that rate dropped to just over 4%, like 4.3% May 1st, right? So the good news is that after years of dismal interest rates, that's what the article says, savers finally have some attractive options. Banks have cranked up returns on savings accounts to rates approaching the pace of inflation, while treasury bills and money market accounts offer similar returns. Here's some good options if you're looking for somewhere to park your cash. So this is what they're saying. They're saying online savings accounts returns 3.9 to 4.8%. Yeah, there is kind of a nice thing as far as your immediate liquid funds, but also this is in a place that I would feel really comfortable putting huge amounts of money, because even if it's FDIC insured, there's a certain cutoff there. There's like half the banks right now are in insolvent type of situation because of what's happened with higher interest rates. So they had all this money in their reserves, to low interest rate. And then all of a sudden interest rates go up. So if they have people that want their money out, they have to sell those at a loss because other people could buy better interest rates right now, or they can, put money into bonds with better interest rates. So that's that's a little bit of a concern, is what's going on with the banks right now. But yes, much, much better interest rates because we have all this inflation and because there's been so much money added to the economy through quantitative easing. So this person they're quoting says they've been advising their clients with extra cash to save their emergency fund up to 6 months of expenses in a high-yield savings account. Look, I think 6 months is the minimum, not up to. Now, that might be tough to get to, but that's why I have all these videos on YouTube to kind of help you figure out how to find that cash and plug financial leaks. But 6 months is the minimum you want to get to, not up to 6 months. But I don't like to have my money in what I would call an emergency fund. I call it a peace of mind fund. Peace of mind is when I know it's there, I can be more productive knowing I've got, short-term, unexpected things handled. Emergency, I just don't like using the word because I think it puts us in a scarcity mindset. So similar kind of function, just different viewpoints. And I don't put a lot of money in high-yield savings accounts. I use cash flow banking. So yeah, cash flow banking. And if you want to learn more about cash flow banking, sure, you can grab my book, GarrettGunderson.com/WWBD, as in what would billionaires do? You don't have to be a billionaire to get the benefit from that, but that's where I kind of save mine because it's much more stable because banks use fractionalized banking, which means they're lending their dollars out more than once. And they've got this issue that I kind of brought up with the change in interest rates on reserve accounts. And, we've seen what's happened with several of the banks, whether it's Silicon Valley Bank or, Signature Bank. There's a lot of banks out there that have kind of been in trouble because of where they're holding their assets and the change in interest rates. So it is very easily accessible and all that kind of stuff. So fine, that is better than it used to be, but I have something that, is getting me a bunch of benefits, including tax benefits, liability protection, access to it before 59 and a half, even though there's the tax benefit of it growing tax deferred, and I can get access to it with tax advantage strategies that I might not have to pay any tax at all. I can have it come along with a death benefit, and so you can read about that in the book. So it then goes on in this story to talk about CTI Bank, Citizens Bank, PNC, and a couple others have APYs of 4.25% or higher, according to bank rate. So you can kind of just check out some of those things. A savings account will offer quite a high return as other options, it says, but it's great for ultimate flexibility. So now it's talking about money market accounts, being at 3.9% to 4.75%, saying that those are another attractive option for people who have a brokerage or robo-advisor account. Fidelity, Morgan Stanley, E-Trade, Robinhood, Wealthfront are popular examples. They offer rates comparable to high-yield savings accounts with the highest APYs today ranging from 4.3 to 4.75% according to bank rate. The benefit of a money market account is that the cash that's earning an attractive return is also available to immediately invest in the stock market, making this a good choice for frequent investors. So again, it gets you to believe that investing always equals the stock market, and definitely wouldn't what you want to do with your emergency fund wouldn't be immediately invest in the stock market, but It's now saying the downside is that money market funds can take a few days to transfer into a checking account to spend. So it's not as good of a cash repository for financial emergencies. And as with savings accounts, interest rates on money markets aren't fixed. So in a money market downturn, they could drop more quickly. Now it's saying Treasury securities return 3.3 to 5.2%. Treasury securities, unlike savings or money market accounts, offer guaranteed interest rate for a specific amount of time. Today's short-term Treasury yields are the highest they've been in 2 decades. So yeah, that's good news, because if you're looking for highest yield on short-term instruments, 4-month Treasuries are currently yielding 5.2%. They might be the right choice for those who are comfortable actively managing their investments, or for those with over $250,000 in cash, according to an advisor. This is unlike high-yield savings accounts, which are only FDIC insured up to $250,000. Treasuries are guaranteed by the government regardless of how much you invest. Although it is kind of interesting that Janet Yellen in an article recently is like, oh, well, we could default as early as June if we don't raise this debt ceiling. Of course they're going to raise the debt ceiling. They love to overspend and raise it, but it's, all these treasuries are backed by the unlimited taxing power of a government. So they're as guaranteed as a government is, right? So they are pretty highly guaranteed, but if they don't raise the debt ceiling, there could be defaults on these types of things. So anyway, that's basically the 3 things that this article talks about. What I would like to say is I'm more of a utilizer and believer in cash flow banking. I'm putting my money into overfunded life insurance policies because it has less risk than the banks right now. These institutions that have been around for at least 100 years is my rule, having only A-level ratings by 4 different agencies, mutual-based companies, so they're not traded on a stock exchange, so you as the policyholder get the benefit of the dividend and it's not split. I want them to be worth billions and billions and billions. If not, I have a policy with a $1 trillion company. So they have a better track record and they have more stability than these banks. So I'd be more concerned with the banks right now. And the great thing is when I'm putting money into my insurance, the state I'm in, fully protected from liability, it's tax deferred. I can access it before 59 and a half. The dividend rate has gone up with higher interest rates. So I get a minimum guarantee in my policies on the cash of 3.5, 4, 4.5, depending on the company. Once the dividend's paid, it becomes guaranteed. If interest rates are higher than dividends, I could always utilize that cash or get to it early and put it somewhere else. But now it comes with a death benefit with it as well, or accelerated benefit riders. So I get all these benefits and I get the savings. Now, the downside to the insurance is these 3 options that we heard in the article are immediately available. There isn't insurance costs that are assessed against it. So in the first 1, 2, or 3 years, you're going to be ahead. But if you look more medium term as a place to store your money, you can now get a much better structure with a lot more benefits. But again, it's going to take a little bit of time to build that up, and it has to be designed properly. So if you want to grab my book and look in there, I think that'll help you out. I would just recommend, there's probably only like a dozen companies that could do this properly. And you can navigate this channel and look at other videos where I've gone into great detail and even shown calculators and illustrations so you can start to compare. So this is the one thing that was missing from this article. Those 3 options they gave you are decent short-term options to store your cash. I'm not really excited about what's going on in the banks right now, but I have zero concern with the insurance companies I've selected with all the chaos in the economy, because these are ones that survived depressions and recessions and wars and all that kind of stuff, and they have a lot more stability with less risk. Hey, thanks for watching. I appreciate it. And if you're enjoying these videos, well, there's good news. More where that came from, so go ahead and click through and watch the next video now.